Good evening and welcome to Capital Connection, where we join the dots to give you the big picture for business in Africa. I am Fifi Peters. On the agenda, we ask our panel of experts, is the competition for African business between the West and China a healthy state of affairs? Or are there negative consequences for the scramble for business access which undermines the development of economies? In our Youth Africa segment, we meet a Nigerian entrepreneur whose tertiary education served more as a distraction and a hindrance to her eventual business success in the cosmetic industry. Firstly, we speak with CNBC Africa Head of Programming, Chris Bishop, for Business News making headlines.
Well, starting off in West Africa, Nigerian lawmakers are given the green light for a probe into the state-owned Nigerian National Petroleum Corporation over a shortfall in payments of $327 million to government coffers. Now, this is ramping up pressure on the state company after government ministers last month decried lower payments to the government account, which they described as unacceptable in light of higher crude oil prices. Now, a big story tonight here in Johannesburg. South Africa's gold mining companies and unions began wage talks in Johannesburg earlier today for about 80,000 miners. The National Union of Mine Workers opened the bidding with the demand of 37% wage hike for the lowest paid, demand over 2 years, translating into annual increases of between 15% and 18.5%. The companies involved include Anglo Gold Ashanti, Harmony Gold, Sibanye Stillwater and Village Main Reef. Now in East Africa, Kenya's Parliament is opening investigations into cell phone company charges. Parliament's Committee on Communication, Information and Innovation says the inquiry will also look into airtime and data rates charged by all the country's service providers, including the Big Four, Safaricom, Airtel, Telkom and Equitel.
Now, Chris, the gold story quite interesting here in South Africa, and we do know that the gold price may be edging up, but are these realistic wage demands given the prevailing global business environment?
Well, there's certainly very large demands. I mean, I think even the average out you saw there between 16 and 18%, that's quite big. You have to remember that the margins in gold mining at the moment, they're very, very thin. A lot of shafts are being looked as uneconomical, a lot of mines are being reshuffled in the way they work. And also on top of that, I mean, there's a report from the mines themselves. They're saying something like 75% of the gold mines of South Africa, once world famous, are now unprofitable. So I think it's going to be very, very tough for the unions to work the management up to anything more really than the current inflation rate of about 5%. This is going to take many, many weeks. It's going to be quite a lot of horse trading, I think. But I think certainly it's going to give us a good idea at the end of it where the mining industry is going. For the companies themselves, it gives them a chance to fix costs for 3 years and so they can plan ahead and look at investment.
Well, thanks for those insights, Chris. So we'll leave it there. Turning to Rwanda, the German car maker Volkswagen recently opened a car assembly plant in Rwanda, making the 4th production facility established so far in Africa by Europe's largest car manufacturer. Maggie Mutesi has been following developments and joins us from Kigali. Hi, Maggie. Has VW given reasons for its decision to build a plant in Rwanda when it could have easily expanded its existing production facilities in Kenya, Nigeria, or even here in South Africa?
Hi, Fifi. Now, you are right. Well, for beginners, it might appear somewhat strange that Volkswagen has opted to invest $20 million in a small landlocked country like Rwanda, rather than expanding its existing operations in the 3 other African states where it's already operating. But there are sound business reasons for this, which have been explained to us by the Volkswagen team when we visited the plant. Take a look at the package.
It's a big win, first of all. Every time a major international brand gets into a country, it's a confidence. It boosts the confidence of other potential international investors. Brands are like birds of the same feather, they flock together. So when Volkswagen comes, someone else is starting to look at the market. They will all start looking. What is it in Rwanda that Volkswagen is looking at? So it sparks attention from other potential investors, which is a very good thing. Now, for the actual benefit of Volkswagen in Rwanda, major boost in terms of employment, because already you're going to look at a number of local hands hired to assemble cars. A single car has, on average, 30,000 parts. Now, putting them together requires a minimum of 20 people. It's a very labor-intensive job.
One of the biggest challenges is the used car market. If you reduce the number of vehicles coming in on the used car market, then it will automatically grow the new car market. Obviously, pricing becomes the issue there, but with the production plant we've got here, and the President has agreed that the project is duty-free, and so it makes the cars more affordable. Then you've got the Motability program, where self-drive program, plus the Uber-style program along with it. So we feel it's going to be very successful here.
Well, thanks, Maggie. Now, Rwanda is often cited as one of Africa's most business-friendly countries. But even so, with a per capita income of about $750, the majority of Rwandans will not be able to actually afford a Volkswagen, even if it is produced in their own backyard.
I completely agree with you, Fifi, but that is only the case if you view car ownership through a traditional lens of someone buying a car with a bank loan or after years of saving up. Now, there are about 200,000 registered vehicles in Rwanda for a 12 million population. Volkswagen's sales strategy is based on the gig economy, and in doing so, it has identified the huge number of people requiring transport. Now, they hope to sell vehicles and use them in an Uber-like car-sharing system. This, they hope that it will allow people book rides using their smartphones. But also, we have to understand that the cars currently on Rwanda's roads are generally second-hand Japanese imports. Those don't qualify to be used by a company like Uber or any other apps because of their age and condition. Now, that's the niche that Volkswagen is planning to exploit for its Rwandan vehicle sales throughout the region. But also, it's important to note that some cars will be sold into neighboring nations. We're looking at a Democratic Republic of Congo with a population of over 80 million people. They are also using Rwanda as a gateway to neighboring countries like Burundi and other surrounding East African countries.
And now for our regular Wednesday slot, Youth Africa, where we put a laser focus on young entrepreneurs shaping both theirs and the continent's economic future. Anita Browse has become a sensation in Nigeria for her cosmetic business. I caught up with her via Skype.
I've always been into makeup. I think with everything that I studied was me trying to find something else that wasn't makeup. So I kept saying, let me put this makeup aside. Let me find something that I can do that would interest me. But I just never really, I never really hit the nail on the head. So I studied journalism and media, and then I went on to study marketing as well. But I just always did makeup. And once I was out of school, I still did makeup.
And you were raised in Ireland. Why did you decide to build a business in Nigeria?
So when I was in secondary school, my final couple of years, I was watching a lot of YouTube, watching a lot of makeup videos, and I used to recreate makeup on myself, and I would take pictures and put it on my social media. And then while I was in school, I got a call saying, "Oh, Anita, I need you to do my makeup." And I was thinking, why is someone calling me to do the makeup? But I spoke to my mom about it. I gave her a charge and I did the makeup. And since then, everyone started, calling me to do their makeup. So it's something that grew with me. Even when I was in college, I would be in class, and then right after class, I rush to do someone's makeup. And I've never really done a 9-to-5. I've never really worked anywhere else, and this is all I really know. So I would say makeup kind of grew with me. It's not something I decided to do. It kind of grew with me. It was a passion that grew into a business.
You're quite active on social media, Anita, and have quite a large following. Are there any lessons to be learned from promoting your business in this particular avenue?
Social media is two things. It can be bad, it can be good. With social media, you can easily send off the wrong message, but it can also be good because if you're a good person, you can be very intentional about your brand. You can set your vision, you can set your target and execute it and show it off to social media. So social media helps you kind of, explain to people who you are without being in front of them. It's sort of cheap advert. I wouldn't say cheap, but yeah, it's cheap advert because I know advertising on billboards and all of that stuff is quite expensive. But the way the world is moving right now, we have social media. No one's really advertising on the boards, and now we have beauty influencers that you can just pay to post your work or to post your product. With that, you don't need to advertise in Nigeria, you don't need to advertise in Johannesburg, you don't need to advertise in New York. Because of social media, you can hit your audience in every single country you want it to hit.
Well, thanks, Anita. We will leave it there. After the break, our panel of experts examine whether the competition for business in Africa between China and the West promotes or undermines economic development. Stay with us. Welcome back to Capital Connection. Joining us for our discussion on the pros and cons of China and the West's fierce competition for business right here on the continent is Adrian Saville, CEO of Cannon Asset Managers in our Johannesburg studio. In Kigali, Chrisopher Kayumba, a senior lecturer at the University of Rwanda, and in Nigeria, Muda Yusuf, the Director General of the Lagos Chamber of Commerce. Gentlemen, welcome to a Capital Connection. Adrian, perhaps if I begin with you. Of course, this competition between the West and China, some view it as healthy. It allows African economies to really step up and get the best possible deals for themselves. Others think it's a hindrance to economic growth and development on the continent. What's your view?
I think we always need to be careful of sort of making a single statement and sweeping conclusions, and that you have to assess this on case by case and granularity. But I would argue that one of the most sensible voices on this issue is that of Dambisa Moyo, the Zambian-born economist. And she makes the observation that although the West has been dominant in economic models and political influence, there is a new party at the table. And that new party takes the shape of state-led capitalism, being born out of China's extraordinary success. And I think it would be naive and arguably at great expense that we ignored this or relegated it to a single statement.
And Chrisopher, if we can bring you in right now, the competition between the West and China for Africa's resources, how do you view it? Positive or a hindrance to the continent's development?
As to whether it is the competition between China and the West on Africa is positive or negative, I think you have to take two broad points in mind. First, you have to understand that nation states are not humanitarian organizations. You have to understand that whether it is China or Western countries, they are interested in Africa because they are advancing their national interests. Number two, therefore, you have to understand that the West is somewhat interested in containing China. In containing China because China seems to be the new entrant on a former sphere of influence, that is Africa, because as you know, historically, the West has predominantly been the biggest trade partner and the biggest aid giver to Africa. So China, because is a new competitor on the continent, I think the West is interested in containing it, because if you consider it with its increasing global influence and power, economically, politically, and military-wise, it must scare the West. And therefore, that is the broad point number one. Broad point number two, I think it is very good for Africa that the West and China are interested in Africa and that they are competing for it, because if Africa defines its interest very well and engages these two broad, bigger partners profitably, I think at the end of the day, Africa will benefit more than when it used to have only the West as the biggest trading partner and the biggest aid giver.
Muda, Christopher, they're seeing the competition between China and the West for Africa as being potentially positive if Africa is able to get the best deals for itself. What's your view?
Yes, I agree with Christopher. In any competitive environment, and in an environment where there is competition, the end user is always a major beneficiary. So in this case, there is competition between China and the West. For Africa, I think it's something that is good for Africa. But what is important is for Africa to also be able to define its interest properly, so that this competition or the outcome of the competition will be to the larger benefit of African economies. We must position Africa, we must come up with the right kind of policies, especially trade policies that will enable the citizens and the peoples of Africa to take maximum advantage of the outcome of this competition. Because it is not everything that comes out of the competition that will be beneficial to Africa. So we must have the capacity to properly evaluate the outcomes of this competition for Africa in order to be able to identify and adopt strategically the options that are placed on the table for African economies. So this is very, very important.
And I think
so
many
that
people
can get
would
the best value from the competition.
Sure, many people would agree with you there, Muda. Adrian, the common thread that's coming out is it's not quite a bad thing, this competition between the world's two largest economies. The problem maybe for us is that we're not defining what we get out of it a lot better. Going forward, how do we do that? How should we do that?
You know, I think I really like the point that Muda made in his observations, that this is in part about self-determination. As a case in point, if one of the ingredients of China's engagement with the region is investment in infrastructure in particular, if you consider the way infrastructure has been established under US involvement and former colonial involvement, it was overwhelmingly extractive infrastructure that was designed to move resources from Africa to the rest of the world. And if part of self-determination, self-definition could take the shape of ensuring that that infrastructure is inclusive and integrative infrastructure that facilitates trade not just with the world at large, but with neighbors as a point of departure. So I think there is a lot to be said about the potential to influence and impact self-determination, and in the same breath to make sure that the forms of engagement are inclusive and not extractive.
Because for most part, they have not been inclusive, the forms of engagement. Christopher, how does Africa ensure that it better defines its role in the global trade scene to ensure that it has better outcomes for itself?
Thank you very much again for that question. I think beside defining properly its interests, Africa will benefit from global trade, from engaging global partners, if as a continent there is well-coordinated pursuance of the defined policies. Number two, there must be, Africa will only benefit if those interests and the coordination is done purposively.
Definitely agreed with you there. I mean, talking about the coordination of policies, Muda, right now we are talking about the signing of the agreement by most African states to increase intra-Africa trade, except that of Nigeria. I mean, what's the reason for the delay, particularly if intra-Africa trade or further intra-Africa trade between African countries will certainly ensure that we get the better deal when it comes to this competition between the two biggest powerhouses in the world?
Well, in all of this, the quality of African institutions is very, very important, because the capacity to come up with policies, the capacity to identify opportunities and risks, and the capacity to ensure that we get the best for the continent is largely a function of the quality of institutions that you have in Africa. So we need to work critically on our institutions so that you can have the right kind of policies. Concerning the whole agenda about promoting intra-African trade, there is a lot of advantage that it brings, and of course there are also a lot of concerns that have been expressed by some of the stakeholders in Nigeria. The concerns lies largely with the capacity to take advantage of trade opportunities. These are critically supply-side issues which borders on the quality of infrastructure, the competitiveness of production in Africa, particularly in Nigeria, and the concerns about the capacity of African institutions to ensure that the rules of engagement, the rules governing trade are properly respected, especially issues of rules of origin. There are also concerns in Nigeria about the fact that some of the African countries already have protocols, trade agreements with other blocs, other countries outside of Africa, which may compromise the interests of some of the African economies within the context of intra-African trade. So these are some of the concerns that have been expressed in Nigeria. These concerns have been addressed. The government has, in the last 2 months, scaled up engagement with the critical stakeholders to ensure the buy-in of the key stakeholders into the agenda to promote intra-African trade, especially the African Continental Free Trade Agreement.
And Adrian, I could see you nodding there in agreement with some of the things that Muda was sharing. What is it that you were agreeing with exactly?
Yeah, look, to borrow from what Muda said, and I think Christopher's observation. In fact, I'll lean on Christopher's home base, where Paul Kagame makes the observation that Africa has been the subject, the victim of a number of hollowings out. And if Africa experiences a hollowing out a further time, perhaps the explanatory factor might reside to some extent with us rather than with them. And that's in no way an apology or searching for forgiveness in another forum, but recognizing, I think especially Muda's point, that this is about institutional capacity and capability. And that if we have in place effective institutions, and that if we work on the arrangements, starting with policy and going through to practical aspects of implementation, such as the source of origin, knowing that the goods that we are trading are actually African originated goods, then those capabilities, along with the institutions and the policies, translate, I think, into an economic and a social outcome that is potentially very powerful.
And Christopher, some final thoughts. I mean, do we have the best policies right now to do business with the West and with China? And if not, what should that policy look like to ensure that Africa gets the best deal out of this business transaction?
Yeah, thank you. I really don't think that the biggest challenge for Africa to engage with either the West or China or any other global power has been with policy. Because if you look at the blueprint, if you look at what Africa has done, first from the Organization of African Unity, then now African Union, and even individual governments, the problem has not been with policy. The problem has been with implementing those policies. And secondly, as one of the guests has observed, the capacity for Africa to use all its capabilities. Capabilities defined as using individuals who are capable. Capabilities defined as using their institutions effectively and deploying their resources effectively. So the challenge for Africa has not been and is not about policies, written texts. It is about pursuing those policies to their logical conclusion.
It's about walking the talk, isn't it?
Yeah.
Well, we'll leave it there. Thank you so much, gentlemen, for your time. That's all we do have time for this evening. Thanks again to Muda Yusuf, Chrisopher Kayumba, and Adrian Saville. We will see you next time on Capital Connection on Monday and on Wednesday at the same time, 6:30 p.m. Central African Time. It is bye for now.